it's bull or bear, I don't care. It's quite a rough ride, just like life. But I'm kinda patient, 'cause only time will tell. It's gonna go up, so you better stay calm. Grow your coins, you gotta grow your coins. Grow your coins, grow your coins. Grow your coins, you gotta grow your coins. Grow your coins, grow your coins. Grow your coins, you gotta grow your coins. Grow your coins, grow your coins. Grow your coins, you gotta grow your coins.
What's up, ladies and gentlemen? Welcome. I am the Crypto Crow. Some of you guys are new here, guys and gals. I recently did a video with Ben over at BitBoy Crypto, and that was a lot of fun. Just kind of shooting the shiznit with him on Cardano. Last I checked, that video had over 80-something thousand views, and I noticed that my subscribers went up by a couple thousand, might be a few thousand by now, I don't know. You know, for those of you guys that are new, I'm pretty much a call it how I see it, straight up and down, dude. I'm no genius, I'm no wizard, I'm just an old guy on the interwebs that happens to love crypto, and I've been in it since 2017. I share what I learn. I share my thoughts, my opinions, and it's pretty much the extent of it. I always say, don't ever invest more than you can afford to lose. Do your own research, yada yada. You've seen it all a million times, but it's true, because I'm not a financial advisor. None of us are. Quite frankly, I don't think even registered, licensed financial advisors have a clue what the fuck they're talking about when it comes to crypto. So I don't know. Maybe it's all a matter of opinion. I mean, it's still so new. So much of this is so new. What isn't new are market cycles. And I was turned on to this book, Conquer the Crash 2020. This is an updated version of it. And I've read the whole thing. And it is eye-opening to a large extent. I've learned a hell of a lot. I'm going to be reading it again because there's so much. And this video is really about some of the finer points of a lot of this book. Now, I'm going to tell you, I didn't want to straight plagiarize the entire book for a YouTube video. So I have intentionally left a lot out. Okay, I can't cover the whole book in a video. I'm going to say I highly encourage you to get this book. You can get it on Amazon. You can get it on Kindle if you want. I think I bought one of the last copies of the hardback version. Now, I don't know if they, have added more since then. I haven't checked. The book is, however, $100. Now, before you scoff at $100 book that's only yay big, I'm going to tell you right now, I'm absolutely glad I bought it. And I don't really care if you are a crypto investor. I don't care if you're a traditional stock investor. I don't care if you're just a business person. I don't really care who you are or what your investment portfolio looks like or what you're into. Buy the damn book. I'm telling you straight up, buy the book. You're going to learn a hell of a lot. And if you don't learn $100 worth of what I honestly feel is life-changing information from this book. I mean, honestly, of all the books I own, this book was specifically, I would say, my number one. And I'm not kidding. They're not paying me to do this review. It's not even a review. I'm literally basically taking some of the content out of the book and sharing it with you because I think it's so important. But there's so much more to what I'm going to share here that I really encourage you to buy the book and fill in the blanks, because I feel like this is by Robert R. Prechter. And yeah, I don't know what else to say other than I bought the book for my own purposes. I read it and I'm like, this is going to be YouTube content, because there is a message here that I think everybody really needs to wrap their head around. And, it covers a lot of stuff that I'm not even into, but it's very, very valuable help in a time when I think we're really gearing up for, a deflationary period, a depression, whatever you want to call it. I feel like there's so much going on in the world today. Very valuable book. So we're going to cover it. I have actually emailed his media team and said, hey, I'm doing a video on it. Is there anything that I should or shouldn't cover? I'd love to have Robert Prechter on my channel to discuss the book. So maybe there's a chance I have him on to elaborate on his own words. But a lot of this stuff I literally just wrote right out of the book. Okay. And I tried to do it in a way that was fair to the author. Cause I mean, quite frankly, I want you guys to buy the book. I don't want to give everything away in this video. And I would say out of the entire book, maybe 5% is going to be in this. Okay. But you're going to get the idea. So without further ado, let's get forward. What are we going to cover? We're going to cover bonds, real estate, collectibles, cash, stock, commodities, precious metals, cryptocurrencies, and preparation. An overall summary of the do's and don'ts that are laid out in the book. Now, here we go. Bonds. Any bond issued by a borrower who cannot pay goes to zero in a depression. The whole idea being, if we are entering into a depression or a deflationary period and everything in the world just starts to tank, right? What can we expect in the different instruments for investment and the like? What are safe bets? What should you have? What shouldn't you have? And that's ultimately what we're covering here. FUD, fear, uncertainty, and doubt, prompts investors to sell bonds of any issuer they fear could default. Bonds rated AAA or BBB at the start of a depression almost never keep those ratings. And a typo. There's probably going to be a lot of typos because I'm barely able to see. Keep those ratings. Many go straight to D and then become delisted because of defaults. So if you're talking about, I'm going to go buy a bunch of bonds because those are going to be a safe haven against a deflationary period in the economy, well, think again. It's probably not going to work out the way you hope. Number 2, invest in cash. Is cash really trash? In Cyprus, I'm going to have to get closer to my screen because I can barely see this. I should have used a different font. Sorry, folks. In Cyprus, credit was curtailed in 2013 and a soaring demand for cash, the one thing nobody had. A March 26, 2013 article in the Financial Times reported the most immediate problem confronting businesses was the scarcity of cash. A businessman in Cyprus said, the market is operating on a cash basis. Everybody wants cash. That was the immediate result of a deflation in Cyprus. Basically saying that when the sky is falling, people want to use cash because so many different things happen during a deflationary period. And we'll get into some of that a little bit later. But I mean, banks can sometimes close, assets in banks can be frozen. I mean, a whole number of different things can happen. And cash in hand is what matters at a time when all other avenues have been restricted or limited or cut off or whatever. So you're not necessarily investing in cash, but in a deflationary period, right now we're talking, Bitcoin is a hedge against inflation, right? So as the government continues to print more money, the value of that money continues to go down, down, down. While Bitcoin's value or other cryptocurrencies like Cardano or Ethereum or the like continue moving up, right? Because it's limited supply and so forth and so on. With the US dollar not being backed by anything, ultimately in a deflationary period, the value of that dollar tends to rise, right? And so the idea is all of the infrastructure, a lot of the banking systems and just all of it starts to go down, right? In a deflationary period, but the value of cash goes up. So it's a really big deal because what happens is a lot of investments start to plummet and people are left with much less than they once had, and then all sorts of things ensue. So that's basically what this is ultimately trying to say. Cash is only trash when it's inflation, inflation devalues it, and there are other instruments in play that you can get more value or a return on that investment than just holding cash itself, which right now is the case. But if we enter a deflationary period, cash will no longer be trash. It's going to be very, very sought after. And I think to play further into this, when central banks decide to launch like the CBDC or like their own stable tokens on the blockchain, or even like their centralized tokens, whatever the case may be, I can see us ultimately being pushed to adopt that during a deflationary period. And that will be a way to really start pushing people into that vehicle as opposed to, everything else going on. I think that could be a very significant part of a grand transition or a great reset, if you will. Have some cash on hand for gas, groceries, and other needs. Cash is the only asset that absurdly rises in value during deflation. Holding cash ready to buy this bottom of the stock market could be life-changing. Safe cash equivalents can be optimal. Sorry, wow, what a terrible font. Safe cash equivalents can be optimal for larger sums of money, but picking the right ones can be tricky. See book, for example. Basically saying that there are some other, investment vehicles that can be used for large sums of money. You're talking millions of dollars or more, because you're not going to walk around with, $1 billion in cash. You're not going to have $1 billion in cash sitting in safes in your house somewhere. So that there are alternatives. Now, collectibles. Never buy anything marketed as a collectible. The upside of collectibles generally means having gotten in at the ground level. So, like you see like Star Wars collectibles, right? When they first came out and everybody was buying them and playing with them, it's the people that like kept them in the boxes and held on to them for decades that are now valuable. Like they're collectible. But a lot of companies, they try to launch these little whatever it is, and they're like, buy our collectible, whatever the hell it is. Well, basically the potential price of it being collectible potentially in the future is ultimately baked into the retail price, and it's all kind of it's a fad. They come and go. A real collectible is something that just is just launched as a natural part of the society at the time or culture at the time, and people buy them and collect them and preserve them over time because of how much they meant to them. And it just so happens that there are a lot of people that feel the same way about a particular item or product. And, as the availability of those products diminishes due to use or playtime or damage or whatever, it's the sentiment of a lot of these products that raises the value of the individual products based off of the supply. And so, things that are intentionally marketed to be collectibles generally are not that valuable. Baby boomers who covet reminders of their youth will die off in the next 20 to 30 years. That's a grim thought. And most of their collectibles will be considered little more than curios. If you collect certain items for the love of them, keep capital on hand and wait for the bottom and buy up all the stuff you want at pennies on today's dollar value. I mean, there you go. If you want to buy collectibles, just wait until the bottom. Invest in commodities. Look at 1929 through 1938, where the stock market crashed due to intense deflation, in which commodities crashed too. Some people today who are concerned about economic upset are looking for a replay of the inflationary 1970s, in which commodities rose. But most assets will be moving down more or less together as liquidity contracts. Any deflation will crush hard asset prices right along with share prices, just as it always has. So commodities, not necessarily a safe haven. Summary of don'ts. Don't own stocks. These are the summary of don'ts during a deflationary period or depression. Don't own stocks. Avoid high yield bonds like the plague. Don't own any but the most pristine bonds. Don't invest in real estate. A part of this, I think this is out of order because it imported it, but we're just going to go over everything. Don't invest in real estate. We're going to cover why in the future. Don't invest in commodities. Don't invest in collectibles. Don't trust standard rating services. Don't presume that the government agencies and central banks will protect your finances. Don't buy investments too soon just because they look cheap. Chances are they're probably going to get cheaper. Fight the inertia that will keep you from taking action to prepare for the downturn. Start taking steps now, which is one of the reasons why I bought this book. And I've been buying other books on like survival tactics. I'm trying to learn how to be MacGyver if I need to. Like, how do I make a 300 watt oven out of a matchstick and a pop can? Like, I want to learn this stuff because you just never know. And what sort of things should I stock up on? What sort of things should I have for personal safety, property safety, all of that stuff. I mean, this is all stuff that I'm putting into effect now just in case, because honestly, just having the comfort of knowing that I am protected to some degree. I mean, there are some things you just can't protect against. And the book does go into, oftentimes during a deflationary period, war is a big thing. I mean, company based off of, the economy of the country, the relationships and the value of what the other countries have invested in our economy. If things go south, man, they don't like that. And a lot of stuff happens, and generally it's the public that pays for the price, and it's never very good. So, we'll get into some of that a little bit later. Open accounts at 2 or 3 of the safest banks in the world, not just like your neighborhood. Look for the safest banks in the world as a place to store some of your assets. Invest in short-term money market instruments issued by the soundest of governments. Own some physical gold and silver coins, which I'm actually going to be looking into and just maybe buying a little bit now, like just to have them, because you never know. Have some cash on hand. Here's the thing, during a deflationary period or a depression, a lot of banks can just like close up. Assets in banks can be frozen, so you can't withdraw over a certain amount. And your assets are very much limited. So you want to make sure that you have those assets readily available for purchases, for trade, for maintaining, some form of livelihood while all this stuff is going on around you. So, while a lot of us, including myself, are big proponents of cryptocurrencies and Bitcoin and Cardano and things like that, that stuff is not likely going to help you yet in a depression, right? Because people want tangible assets. They want things they can use and benefit from right now. And it's not going to be very likely that if something like this takes place, in the coming, 6 months or the next year, that ADA tokens are going to help anybody buy, tomatoes, or, what I'm saying? So you want to make sure you have cash on hand no matter what your position on crypto is. Make sure that you have insurance policies only with the safest firms, and make sure they deal only with safe banks. If you are so inclined, speculate conservatively in anticipation of a declining stock market. If it is right for your circumstances, sell your business. Chances are it's going to go down anyway. Make a list of things you want to buy at much lower prices than when they go on liquidation sale. Politics will change things. What to expect in a bear market or depression. In severe economic times, governments have been known to close markets, restrict travel, ban foreign investment, demand capital repatriation, outlaw money transfers abroad, close banks, freeze bank accounts, restrict or seize private pensions, raise taxes, fix prices, and impose currency exchange values. Now, my added question to this is, which of these above could you see the current administration putting into effect? Just based off of what's been happening, what do you think they would do? Which have already begun under the guise of something else? It's a question. Not trying to be political. It's just, if there's anything that I've learned in reading this book, it does seem like a lot of the stuff that goes on during, with the, depression, a deflationary period, inflation, all that, it really doesn't matter who the administration is. I think the only thing that matters is what that administration might try to do to resolve it more quickly and to get things turned back around or not. I mean, that's the thing. That's where the politics come into play. What's the overall agenda, and how is that current situation being utilized to usher in whatever that agenda may be? And so that's the question I'm always asking is, what is in fact the overall agenda to what's happening? And how would something like a deflationary period help propel us closer to the end goal of that agenda? And that's what I'm always kind of considering. One good guide to the world's developing crisis spots is Richard Mayberry's early warning report. So Google that early warning report if you're trying to get an ideas like places that might be safer than others in this kind of time period, where you might go to escape some of the craziness or chaos that may ensue. And then finally on this is try to get debt free. The more debt free, the more free. So the more you are bound by banks and the more you are at the mercy of others, the more mercy you're going to have to hope for, because ultimately the more financially independent you are, the more overall independent you are, the easier things are going to be during a downtrend, during a bear market, during a depression. Precious metals may someday become the most important asset class to own. Advisors who have declared inflation's inevitability kept their followers in gold and silver for 21 years, from 1980 to 2001, as they plummeted 70 and 93% respectively in dollar terms. It's thought to be likely that gold and silver will fall into their final dollar price lows at the bottom of the deflation. Most gold bugs assert that gold and silver are a deflation hedge, a stock crash hedge, a war hedge, and a depression hedge, claims that the record does not convincingly support. Gold and silver are still worthwhile investments. If the government ever bans gold sales, you won't be stuck entirely in paper currency and will already have what everyone else wants. Basically, the idea being, I'll just read further and then So be aware that the present legalities of gold and silver ownership could change. This political risk isn't fantasy, even in the land of the free. In 1933, President Roosevelt outlawed gold ownership for U.S. citizens and imposed a 10-year prison sentence on people who refused to surrender their gold to a Federal Reserve Bank within 25 days. Buy actual gold, not just gold on paper. The idea is like, if all you've got is, it's almost like in crypto. If it's not your keys, not your crypto. If you store your crypto on an exchange or something like that, you don't technically have custody of it. You don't own it. It's at the mercy of the whims of someone else. Same with gold. And so that's a pretty big deal when you're talking about where things are headed. Let's see here. Real estate. Real estate prices have always fallen hard when stock prices fall hard. I see all these videos on YouTube and everywhere, and they're telling, start an Airbnb business. And, I make millions of dollars with Airbnb, and you can do arbitrage and all this fun stuff. But the reality is when you're buying property, if we enter a deflationary period or a depression, those properties are going to drop in value significantly. I'm looking at, originally I thought, I'm gonna, whenever I decide to get out of a big chunk of my position in the crypto space, I was planning on buying a bunch of real estate property and launching Airbnbs, because I'm like, it just sounds like a sound business model and something that I could enjoy and have fun with. No, not going to bother. After reading this book, it's like, it makes sense. Why would I do that? You're better off just ultimately holding your cash, wait for the new world currency token to launch and convert into that if necessary. Because you're not going to have many other options. Avoid investing in real estate investment trusts. You see these on YouTube a lot, or TikTok as well. People talking about invest in this REIT. This is why you don't want to do that. Which are perhaps the worst property related investments during a bear market. Some REITs valued at $100 a share in the early 70s fell to 1/4 or 1/8 by late 1974, and most of them never recovered. Wrap up any real estate sales you are working and get out of all investment real estate holdings that are not special situations and wait for lower prices. If you hold a big mortgage on an expensive property that depends on public patronage, consider selling it or subleasing it. Insured. If you rent your living or office space, try to arrange it so that your lease either allows you to leave on short notice or as a clause lowering your rent if like units are reduced in price. Basically, if you're renting office space for your company or what have you, and maybe it's an office building with 30 different units in it, half of those units are full, and maybe you're paying $2,000 a month in a lease, and then they drop all these other units that aren't filled and they drop those down to $1,000 a month. You want to make sure, because of the depression, because the money's tight and this and that, you want to make sure that you can lower it down with those prices. There's no sense in you being caught up in something, you're like, I'm just going to move over here. Basically, you want to make sure that you have a clause stating if they start dropping the prices on surrounding units in your property, that you can lower your lease rate as well. If you have a huge mortgage depending on you, I don't even know what I wrote here. If you have a huge mortgage depending on you, cannot afford unless your current income maintains, sell it and move to something basically that you can handle on your own without having to worry about outside sources of revenue. If you are just as happy renting as owning, this may be a time to do so. I'm sure BlackRock would love that if you decide to sell the property and start renting. At the bottom, buy the home, office buildings, or business facility of your dreams for 10 cents or less per dollar of its peak value. I mean, ultimately, the gist of a lot of this I'm getting is nothing that you think is. Basically, everything that's paying bills today is likely not going to be very fruitful in a downturn, a significant downturn or a depression. Don't be long in a depression. That's the short of it. That's my own little line there. Speculating in stocks. Make sure that your capital is not long in stocks, stock mutual funds, stock index futures, call options, ETFs, or any other equity-based investment or speculation at the start of a deflationary crash, because it's all going down. Don't presume that the Fed will rescue the stock market. Short selling stocks or stock index futures contracts is a great strategy at the onset of a deflationary depression. However, timing is crucial, because if you're wrong, you could lose a lot of capital. It's the same as, people trading Bitcoin at, 10x or 20x or, leverage and all that. It's like, if it just keeps dropping and you short something at leverage, if it only goes down and down and down and down from there, great. But how often do we see, even in a bear market, we get upswells and upticks? It's specifically to get those people out of there. Right? It's to liquidate people's assets that are shorting for too long. That's why a lot of the traders talk about take profits. It's a game. It's a very dangerous game. I've dabbled in it. I've had a little bit of fun, but to me, leverage trading on any level just felt too much like gambling. And in a market that is often controlled by whales with far more than me at stake, and the ability to better control the market and facilitate those swings, and I'm at their mercy, and I don't like being at the mercy of some hoo-ha in some other country with billions of dollars. No, thanks. I buy what I believe is fundamentally sound, and I hold it, and that's it. Inverse index or short mutual funds can be more lucrative than a direct short sale, but there can still be sizable losses if the market moves against you. And that is that. Now, the question here is, or the question from here is, where are we? What do we expect to have happen here sooner than later? And honestly, as I was explaining on BitBoy's video, or on BitBoy's channel, I'm expecting to see a longer market cycle based off of people that I believe in, that I have faith in, and their knowledge and their expertise, like Benjamin Cowan, and I really like Eric Crown, and there are others that I watch. A lot of the technical analysis people out there that I watch, I believe they're sound. Now, The counter to that is that while we may be, continuing on into an elongated market cycle, that maybe all bucks stop in like June of 2022, there are still a lot of outlying factors associated with that, and other variables associated with when the market may come tumbling down. I really like the pi cycle top oscillator, and it's been very, very accurate since inception of Bitcoin. However, that doesn't project or it doesn't break down. Okay, well, if we start entering a deflationary period in the market, that this is going to dictate the top of the market. The pi cycle top and a lot of these other indicators they're indicators for exactly what's going on in the crypto space for the most part. Price action activity, volume over time, and all these other different things. And if we enter a deflationary cycle or some form of depression, the start of that is very likely not going to be indicated by a lot of the tools and things we use. So it's really about understanding where the market is and what's happening on a global level, not just a local level, not just on the macros of a technical analysis chart. And that's what makes everything scary for even me, because while I understand a lot of the fundamentals of the tech, and I understand what's being developed and the value and the use cases for what's coming and so forth and so on, I could be as big a Cardano bull as I could ever want to be. But ultimately, the world itself is going to be what dictates what comes next, not necessarily just the typical price action of a market cycle in Bitcoin. And that's one of the big reasons why I got this book, because there are a lot of other things that I plan to start looking into. And if you want, let me know in the comments below this video, and I will throw tidbits in some of like global news or how the outside world is affecting what's going on in the markets. To some degree, I think some of it is political, which I don't want to get political on my channel at all, because it's so polarizing. And, I have my beliefs, you have your beliefs. That's okay. That to me is what makes the world turn. It's the North Pole to the South Pole. It's whatever. It's okay. I may not agree with everybody. And quite frankly, I'm not a proponent of either side. If I'm real honest, I'm not a righty. I'm not a lefty. I think a lot of it, quite frankly, is a bunch of bullshit. I think a lot of it is illusion to some degree. I always have for the last 25 years. But there's a lot of good that can be done, and I believe that there's a lot happening right now, and a lot of it is politically motivated to some degree, in my opinion. And for whatever reason, I do believe that we are getting ready to hit what I think is going to be a very significant market crash, not just in crypto, but all over the place for a multitude of reasons. And I think that, the wealthy who plan effectively and prepare effectively are ultimately going to be favored in some of this stuff, as sad as it is, because that seems to be what has happened time and time again. And even with that said, I think it's going to be difficult. So, the middle class, the lower class, I mean, who's going to be affected and how? Not everybody has the resources to properly prepare, stock up, do the things necessary. And the thing of it is a lot of people who even have the resources to prep and prepare and do what they need to aren't, because they just don't see it. They don't see what's happening. They don't see what's coming. And so I felt like doing this video hopefully is eye-opening to some people and gives you at least some reference points. I highly encourage you to pick up this book, because I'm not a financial advisor at all. I don't, I'm a crypto guy. I'm not very well versed in, world politics or, economics or any of that. Mark Moss is a really good guy for that kind of stuff, and he seems to have his finger on the pulse of a lot of that. But I highly encourage you to read that book. Let me know in the comments. I plan on trying to make the most of the situation that I can, and ultimately, just in the vein of my channel overall, I like to share what I learn, and if there's any way I can help you prepare for what I think is likely to come, and we can all kind of withstand this situation together, that's ultimately what I want to do. So let me know in the comments below. Does this information help you? Does it freak you out? Does it get you excited? I mean, there's a lot of opportunity if you know what's coming. What do you plan to do if there is, in fact, a big deflationary crash coming? Let me know in the comments. Until next time, guys, crow your coins, and I'll see you again soon. Thanks for joining me.